And so it's 1 p.m. and it's time to go around the world of business in 55 minutes. Welcome to Business Incorporated on Channels Television. Here's what we've had prepared for you for today. In Zimbabwe, we're going to put our eyes on the ZiG, the Zimbabwe Gold, and see how that's faring. Well, a lot of stories going on about Nigeria's diesel supply and energy sustainability. We'll give you the details of that on the program today. Welcome to Business Incorporated. I'm Ini John Mekwa. Let's start off as usual from the global space. Oil prices extended losses on Thursday after a 3% drop in the previous session as investors switched focus to signs that a wider conflict in the key Middle East could be avoided, as well as demand concerns. Brent futures was down at 63 cents, so that's about 0.72% at $86.66 a barrel, while U.S. West Texas Intermediate crude traded at 64 cents lower, 0.77% at $82.05 a barrel. Investors are unwinding the geopolitical risk premium in oil prices on the perception that any Israeli retaliation to Iran's attack on April 13 will be moderate, according to international pressure. Meanwhile, analysts at JP Morgan highlight in a note that worldwide oil consumption so far in April has been 200,000 barrels per day below its forecast, averaging 103 million barrels. And also surging U.S. crude inventories also kept a lid on prices. Oil inventories rose by 2.7 million barrels to 460 million barrels this week, in the week ending April the 12th. This, according to the Energy Information Administration, nearly double what analysts had expected. Stockpiles built as refinery utilization declined at a time when processing typically rises ahead of summer driving demand in the United States. And still in the global space, gold prices climbed on Thursday as risks of a widening Middle East conflict raised bullion safe haven appeal, overshadowing pressures from prospect of higher for longer U.S. interest rates. Spot gold was up 0.8% at $2,380 per ounce after hitting an all-time high of $2,431.29 last Friday. U.S. gold futures edged 0.3% higher to $2,395.50. Israel will make its own decisions about how to defend itself, according to Prime Minister Benjamin Netanyahu, as Western countries plead for restraints in responding to a volley of attacks from Iran. Traders of futures contracts tied to the Fed's policy rate are now pricing in less than 50 basis points of rate cut for 2024, while betting on the first quarter point cut to arrive in September. And now we come to Nigeria, but this story from Nigeria is coming all the way from Washington, D.C., where we know that the IMF World Bank spring meeting is still ongoing. Yesterday, the governor of Nigeria's central bank, Mr. Olayemi Kadoso, was reacting in a session, one of the sessions. They're reacting to the views that the regulator's intervention in the foreign exchange market is responsible for the depletion of the country's foreign reserve. Mr. Kadoso was speaking during a session at one of the ongoing meetings at the IMF World Bank spring meetings in Washington. He said that the CBN is working on policies to support the market and ensure stability of exchange rate.
What you see with respect to the shifts in our reserves is the shifts that you find in any country's reserve situation, where, for example, debts are due and certain payments need to be made. They are made because that is also part of keeping your credibility intact. And other times, money comes in and, takes it up again. And if you watch in the next couple of days, I think between yesterday and today, we had about 600 million US that came into the reserves account. So I wouldn't let people get too excited about this thing. All I will say is that we are looking towards ensuring that we have a market that operates on its own, willing buyer, willing seller, and price discovery. That's where we're going to. The shifts you've seen in our reserves has really, little or nothing to do with defending any naira, and that's certainly not our objective.
So there we have it. We've been having fears that perhaps the interventions that we've been seeing from the CBN to defend the naira is causing the depletion of the reserve. I guess the CBN governor said we shouldn't get too excited, negatively or positively excited, because the CBN is working on policies for a long-standing performance of the FX market. Now, still coming from that meeting, World Bank President Mr. Ejibanga has been speaking about African leaders addressing energy accessibility and the gaps. He emphasized private sector investment, effective government policy, and collaboration with multinational agencies to improve electricity supply. At the Energizing Africa event during that spring meeting, which is still ongoing, it had a special talk with the president of AFDB, as well as other stakeholders from the private sector in energy sector in Africa.
Free sun. The sun is free, right?
The World Bank President and his colleague at the African Development Bank are meeting to discuss how leaders in the region can help change the fortunes of persons in the region through adequate electricity supply. A report by the World Bank estimates that over 500 million people in sub-Saharan Africa are at the risk of being left without electricity access by 2030, with nearly 400 million of them living in countries subject to fragility, conflict, and violence.
If you start creating distribution and generation and transmission and all those jobs, but then the downstream impact of that electricity. Second, infrastructure, houses, bridges, ports, airports. Third is agribusiness and food security. That's a big part of what could generate business jobs. Fourth is tourism. I think the final one is healthcare. Right. You will hear us in the course of this spring meeting talk a great deal about healthcare as well. So I think about these five as enablers, but also as job generators. Point is, without energy, affordable access to energy, nothing is possible.
The president of the African Development Bank is not taking the challenge to connect the people to electricity supply lightly. He is setting an ambitious target to achieve that.
We decided that the biggest thing we can do is to do the solar systems in Africa. So we have this big thing called Desert to Power. Desert to Power is our boldest effort to power Africa. It is a $20 billion investment. Now, what I will do is that will allow us to have 250 million people having access in addition. So if you add 50 million to 250 million, that's 300 million. You add that to what Ajay was talking about, we're at 550 million. And so we finally will be able to put this behind us.
Nigeria is currently facing a challenge with electricity supply. The government and the people are often found seeking alternatives, such as renewable energy supply. This challenge is further compounded by the recent hike in electricity tariffs. Experts believe that with concerted efforts, the challenge can be surmounted.
It's in the best interest of the distribution company to collaborate and work with the mini-grid companies to ensure that we jointly leverage on each other. I have an existing infrastructure today. The mini-grid have other sources to be able to ensure that I can make energy available for underserved or unserved areas. So collaboration is fantastic, is important.
Think bigger, think better, think bolder is the message here as African leaders are advised to solve the energy challenges in the region. From Washington, D.C., Sarah Chilubu, Channels Television News.
That's right. Sarah and Juliana have been busy at Washington feeding us up with what's going on there. And now, in a season of tariff hikes, as players in different sectors seek to adjust prices to capture current realities, operators in the telecommunications sector may be next to follow this trend, as the news that there may be a cost-based, there is already a cost-based study on a possible tariff hike and ongoing should be completed before the end of this quarter. And this, I don't know if you saw the papers yesterday, you would see a lot of write-ups about this. Perhaps the telecom sector is preparing Nigerians for their own set of hike. But can Nigerians handle another increase in household bills, which already has gone up by 27.64% in 1 year, eroding purchasing power? And for over a decade, however, the Nigeria Communications Commission has set a price cap at 15 naira for calls being even below 15 naira, and then the floor cap at 4 naira. Among other players, the Association of Licensed Telecoms Operators of Nigeria is hinting at price review. The coming days, I'm sure we'll see how this pans out, but can Nigerians stand another hike? And of course, the operators will ask you, how do we cope with operations with the level of inflation in the country? We'll certainly settle on this in the coming days. Well, good enough, there's one group or company that is not thinking of a hike. That's Dangote. And we've heard 2 days ago, they did announce that instead of 1,225 naira for a litre of diesel supplied to local retailers, they would now do it at 1,000 naira. Well, I guess it's a thing of celebration. But let's find out if this is sustainable and how they are hoping to ensure that the supply actually goes to every part and it's not being taken for granted. The Director, Group Chief, a Commercial Officer of Dangote is here, Mr. Rabiu Umar. Mr. Umar, good afternoon and thank you for your time.
Good afternoon, and it's a pleasure to be here.
Great. So, I mean, you just heard the telecoms are trying to prepare our mind, I think, for a tariff hike. If you look at their side, I mean, you would say, of course, that operation has become more expensive. So you expect it. But then you also look at Nigerians and see how we have been squeezed. What do you think of this to even start with?
I think the news of the Dangote refinery bringing down the prices of gas oil, which is otherwise known as diesel, as well as other products that will be coming through in due time, I think is a very positive news. We're all in Nigeria. We all face the same inflationary headwinds, and we all are in Nigeria. Whatever it is you buy in Nigeria today, one way or the other, diesel is a factor. When you talk about the telecoms, for example, all the base stations are fueled with diesel. So ideally, now that we're bringing down the prices of diesel, our expectation is that it will have a direct impact on every single item, household item that you have in Nigeria. Be it you're buying rice, whatever it is you're buying, one way or the other is transported with diesel. So therefore, if the prices of diesel is coming down, and we're coming down from 1,650 or thereabouts, almost 60% reduction, which I think for me is a testament to how having an industry within Nigeria has a direct correlation to ease of life for the generality of Nigerians. We are aware that the government is doing everything it can to stem the tide of the hyperinflation we're seeing. And of course, in a sense, this is our own way of contributing to that. So indeed, it's a very, very positive news, and Nigerians should expect that we'll continue to do our best to make sure that prices remain at a very, very reasonable levels.
So should we tell the telecom operators to hold and don't think of a tariff hike yet, because we have Dangote diesel coming to you at 1,000? Because it should. I know that Mr. Aliko Dangote had promised, well, he did express his own optimism, saying that with the drop in the price of diesel, we should see a drop in inflation. But the time lag is also another thing to consider.
Agreed. But like I said, what our group president has said, Alhaji Aliko, is very right. In that, like I said, there's nothing, we can go into details, but there's not a single part of the economy you can think of. If you run any business today, chances are you're using diesel to run that business. If you're in transporting any kind of items, even when you look at mass transportation, you still have diesel has an impact because it's only the last mile that is being handled by petrol. But most of the activities you find, economic activities in Nigeria, one way or the other, impacted by the price of diesel. So if the price of diesel is coming down by 60%, then you would expect to see a commensurate reduction in the prices of goods and services. We're not used to seeing price reductions in Nigeria. And I think it's novel, it's something new, and it's something in the right direction, seeing that here is a company which is starting and is also announcing a reduction in the prices of these commodities.
So Nigerians would like to know how sustainable this will be, because I hope we don't get used to 1,000 and then Dangote will come and say, oh, we're not making profit, we can't cover our overhead costs, and so we have to hike it by a bit. How are you working with this? You know, keeping up with your operational costs, because as you noted, Dangote is also operating in Nigeria, facing the headwinds that everybody's facing, and yet you're able to reduce the price up to 1,000.
So number one, you have to remember that we have the single largest refinery anywhere in the world. Brand new refinery, which is very, very efficient, operating at the highest level of efficiency. Number two, typically oil is sold in the international markets in dollars, where oil is not sold in naira. And as such, we're also able to export some of what we are producing. In fact, we started operations since February. Our first export was in February. And as we speak, in addition to the domestic fuels that we're selling, we're also exporting. So this refinery is now an opportunity for Nigeria to also be able to become a net exporter. There's no reason for anybody to bring a single liter of any fuel into Nigeria when we have more than enough, because the size of the refinery can adequately cater to the needs of Nigeria, of all the product lines you can think of, and even some West African countries. So it's the opposite of importation. Now you have a chance to actually export, meaning that you will already get some forex inflow instead of the outflow. There's no crystal ball to your question on price. Nothing remains constant, but I mean, it's a testament to the fact that we are ready to do business, and we're already selling at a price that is very, very competitive, and it has helped the whole economy to benefit from that low price that we have announced.
Help us to understand the supply chain. We're interested in the domestic suppliers, how you work with them. You know, who are those you have already, perhaps, do we know those who have already bought? I believe Dangote diesel is already in circulation,
yes,
even as we speak. So help us to understand the supply chain, especially for the domestic buyers.
So, you know, typically, most of the fuel, the diesel you find is imported into the country. So we have two sets of customers. We have customers who are buying by truck, and we're loading every day. And we have people who also are buying by vessel, those who already have their own storage facilities. So rather than come to buy by truck, they will come with a vessel and they will take in lots like that. So we are, in terms of value chain, we're open, and we're selling to every Nigerian that has the requisite licenses that you need to be able to operate in that space. And it's an opportunity for, I would say, the smaller players to also participate. And everybody has a chance to be able to be part of that. And you also have a chance, like I said earlier, to export. Because again, that's for me where Nigeria moves from a net importer to a net exporter of the same commodity, meaning that people have a chance to become international traders instead of just playing locally.
And this, of course, will boost our FX liquidity, which is in dire need at this time.
Absolutely. Absolutely.
So we heard you're already doing diesel. You're planning on jet fuel.
We're already doing jet as well.
Okay, you're also doing jet fuel.
We're doing jet as well. We've been loading.
So the aviation sector.
Yes, we're doing jet fuel already, and we have been loading cargoes of jet for a while now.
Oh wow, nice. What about petrol? That's where that's where the bulk of consumers are. Yes. When can we look forward to petrol from Dangote?
In a couple of weeks. We are working.
Weeks, you said.
In a couple of weeks, we should be ready. In a couple of weeks, we should be able to start to do some petrol.
So a couple of weeks, that's in May.
Well, with things like this, it's difficult to be exact in terms of timing because, again, you're starting up a facility. So I don't want to give you a specific date, but certainly I would say a couple of weeks, not more than that. And when I say a couple of weeks, I don't mean 20 weeks. I mean a couple of weeks.
So before the end of May, we would expect that Dangote Petrol, a couple of weeks is, will be in May and all of that.
Yes, so I would say if you're talking like that, I would say in Q2. Rather than to be specific with a
I'll
with
just
a date.
let you know because already in Q2.
Yeah.
Well, so what impacts, do we expect? We have been told that Dangote is exporting crude. Mm-hmm. So we know to manage our expectation because obviously he's not importing crude with Naira, he's importing with dollars. So we expect that to feed in. So what can Nigerians expect as we await the supply of petrol from Dangote?
I think the first thing about fuels or any product is, for me, is energy security. What the Dangote refinery brings, the first, I would say, big advantage is that you have energy security. Because what happens is when you have to bring in cargoes, there are times when you fall short or you have the cargoes in tank, but the distribution is clogged up. And what happens when you have that is that you then have shortages at different locations. What Dangote refinery brings is the security, because two things: you can load a lot of vessels, you can also do a lot of trucks. And these trucks are not going to be coming back into Lagos to come and create further traffic, because what happens is today, look at Apapa. Imagine you take out the fueling or the trucking that happens there, or 50% of it moves to the refinery. What that means is that those who come to load from the refinery are able to take the route through Ogun State. They don't need to come into Lagos at all. So that kind of reduces the traffic, and at the same time, it improves the efficiency of the product getting to the end user. That's, to me, the first one. Number two, you also talked about the pricing. The pricing, I can't talk about the pricing right now because, again, it has to be agreed and finalized. But certainly, you will get availability of the product at reasonably good levels in terms of pricing, because it's produced here rather than being brought in from abroad.
Yeah, well, I know that financial derivatives, they did do like a study and said that about 20% of logistics costs will be cut out. So, that should also attract even more players in the industry. And as you said, should feed more into the issue of energy security in the country. I pray that the long queues at the filling stations will be a thing of the past in no distant time.
Certainly. Yeah.
All right. We have to thank you so much for your time this afternoon. Director, Group Chief Commercial Officer with Dangote, Mr. Rabiu Umar.
Thank you very much. It's a pleasure to be here.
All right. So I guess at least we have expectations of one good news coming in a couple of weeks, according to Mr. Umar. Now, let's take a break. When we come back, we'll head to the market to stay with us. Welcome back to Watching Business Incorporated right here on Channels Television. We head to the markets now, where I think I see a bit of green on the NGX. It's been a while, but Anita has the details. Hi, Anita. I believe you should have a bit of good news for us this afternoon. I don't know about the close of trade.
Well, Ini, sorry to bust your bubble, but at intraday, yes, initially the market was in the green, sustaining that mild gain, which we saw at the close
but still below 100,000.
Yes, still below 100,000. Let's look at the board there. So this actually has turned back into the red, some profit taking as the market is still in session. So, of course, and then we also have about two corporate news that has just greeted the market today, 18th of April. So the market is still in session. 2:30 will be the closing time. So maybe we just might see a bit of a rebound. But at intraday, the market has gone back into the red. So let's talk more with our favorite, with our viewers all around the world. At intraday, Africa, major markets across Africa, they're all in the red. Nigeria's stock market, in the last 2 days, has lost about 902.64 billion naira, no thanks to profit taking on many of the big banks as well as some highly capitalized stocks. So, and year to date, we're still in positive territory, not too bad, 33.61% year to date. But month to date, we're still in the month of April. We're down at about 4.5%. So that's it. We're all the way from 104,000. We're just slightly below the 100,000 points, which it has been oscillating within the last couple of days. For the South Africa Stock Exchange, you see there 0.06% in the red. For Egypt, where we see that in terms of the currencies, we have reports that investors are actually moving from Nigeria's currency in favor of the Egyptian pound, which is giving them more interest for their money. So at some point, the naira is not doing pretty well for the official market, but at the parallel market, the naira is making gaining some grounds there. So for the Egyptian Stock Exchange, the market is very much in the red, 1.60%. And for the Kenya Stock Exchange, what you call the NSE 20, that's the top 20 stocks on the Nairobi Stock Exchange. The market was in the red on Wednesday at the close of midweek trading session, just about 0.29% in the red. Now, for company news, which I mentioned earlier, we have a report that just came in from EcoBank Transnational Incorporated, that they've successfully repaid the maturing $500 million 5-year Eurobond today. And this marks the inaugural Eurobonds issuance in April 2019, which was warmly received by a diverse group of global investors, including esteemed long-term partners, FMO and Properco, who acted as anchor investors to the issuance. So it's also a testament to the bank's financial strength, which, of course, the bank, EcoBank, is listed on Nigeria Stock Exchange, as well as one of the is a Pan-African bank, which, of course, has been making some giant strides in recent times. And still sticking with company news, we have Airtel Africa also announcing that it has purchased quite a number of ordinary shares of $0.05 US on the London Stock Exchange from Citigroup Global Markets Limited, pursuant to the authority granted by shareholders as part of its share buyback program. And the details were announced on March the 1st, 2024. And since the commencement of the share buyback program on that date, the company has purchased more than 11.79 million ordinary shares in aggregate at a volume-weighted average price of 92.53 pounds per ordinary share. So that's it for the company news that we have just released to us by those two companies which are listed on the Nigerian Stock Exchange. Now, let's move over to the Middle East. For the Middle Eastern stocks, now they're back in the green. We've been, in a couple of days, we've been seeing when they resumed on Monday from the Eid holiday last week, they all had a breather, at least they were in a holiday, but then they resumed to some profit taking. But for Thursday's intraday trading session, we see both the Abu Dhabi as well as the Dubai, both of them from the United Arab Emirates, which is a country which being governed by sheikhs there. The markets, both of the markets, let's not forget that yesterday, the stock market was in the red, bleeding, coming from the more than one of the highest rainfalls that they've had in 75 years, so which flooded many of the roads as well as the airports. So that affected the market, with the market was in the red, but we've seen some rebound on the market. And this is all thanks to oil prices as well as some other factors which are affecting not just the Abu Dhabi, but as well as the other stocks on the Middle Eastern market. So if you can take a look at that, where we see the Saudi Arabia in the green, Saudi Arabia's Tadawul 0.29%, almost 0.3%, while the Qatari Stock Exchange very much about in the green, about 0.25% in the green. So that's for intraday, but we will look out for how the market turns out at the close of Thursday's trading session for the Middle Eastern markets. And for the US economy, that's the world's biggest economy, we see the stock futures ahead of the opening for Nigerian time, 2:30 here, where we see the Dow Jones Industrial Average, the S&P 500, as well as the NASDAQ. The stock futures are climbing, and this is coming as investors there are trying to recoup from some of the losses that were recorded in Wednesday's trading session. First of all, we saw the Dow Jones losing 0.12%, while the S&P 500 had shed 0.58%, and the NASDAQ Composite tumbled 1.15%. That's no thanks to the losses from Nvidia as well as some other tech heavies. But for the stock futures today, they're very much in the green, and we'll be looking out for how the markets turn out in the close of Thursday's trading session. And finally, for the Asian markets, we see the regional indexes all climbing back, making some moderate comebacks, starting from the Nikkei. The Nikkei, well, it has dropped all the way from the 40,000, which it said was celebrating, which was the highest since 1990. But then it's not too comfortable at the 38,000 level, almost just hanging by the thread there of 38,000, but still closing Thursday in the green. For the South Korea's Kospi, almost 2% gain at about 2,634.7%, while the Hang Seng's very much in the green, 0.82%. For the Hong Kong, for the Hang Seng, we see that many of the stocks there, the tech stocks, are making some gains there, the likes of TSMC. And then for the Shanghai, we see it a tad in the green, 0.09%, while the S&P ASX 200, 0.48%. Investors they'll be assessing Australia's unemployment rate, which is one of the metrics the country's central bank weighs when considering monetary policy. So they'll be taking a look at that to make some policy decisions. So when the unemployment numbers comes out, it will have an effect on both the market as well as the other economic indicators. So, that's it in a nutshell for the markets at intraday.
Yeah, well, I see green in the Asian market, and I hope that color will extend to the Nigerian market one of these days, even though we see a lot of activities going on in the fixed income market. Thank you so much, Anita.
Pleasure.
All right, let's head to Berlin now, where more companies in Europe are looking to bring manufacturing home, and they are putting their money where their mouth is. We know that China is facing some knocks from the EU, and so it seems like local investors or local manufacturers want to bring it back home. But Cassandra has more details. Hi, Cassandra. Good afternoon. So which sectors or which areas are getting attention at this time?
Thanks for having me, Inni. Well, this report from a consulting group called Capgemini found that this has a lot to do with the post-COVID-19 pandemic world. Many people will probably remember either seeing images of cargo ships stuck off the coast of major ports when there were bottlenecks of supplies, or when entire manufacturing zones in China, for example, shut down and couldn't produce or deliver goods. For a little bit of background, so-called just-in-time manufacturing has been the norm for many companies for decades, popular because it requires less storage and therefore reduces costs for companies. But the pandemic really exposed the risks when it comes to this kind of manufacturing and delivery, aka creating or producing entire items thousands of miles away from their intended point of sale and delivering them right before they would be put on the shelves or sent off to customers. So back to this report, it found that companies across 13 industrial sectors in 11 countries, including Germany, plan to invest $3.4 trillion, that's trillion with a T, over the next 3 years to bring manufacturing home or to a nearby country that has a buzzy new name to it called nearshoring. The biggest reason for doing so, strengthening supply chains.
Let's stick to that strengthening supply chain. Of course, this is very important, but what are the other reasons for these investments?
Well, the second most cited reason for bringing manufacturing back to home countries, or at least nearby, was to ensure national security. The third was reducing greenhouse gas emissions, and that was followed by taking advantage of financial incentives to reindustrialize that are currently being offered by governments. Now, companies are really seeming to put their money where their mouths are. The survey looked at companies that had more than $1 billion in annual revenue, and the German reindustrialization effort, all totaled, appears to be worth about 20% of that country's GDP. France was also surveyed, and its effort looks to be about 13% of GDP, while most of the survey focused on European countries. The US was also part of this look, and even though it is the world's largest economy and has generous subsidies offered through the government's so-called Inflation Reduction Act that passed a few years ago, the US's manufacturing revitalization plans only seem to be worth about 5% of that country's GDP.
Yeah, Cassandra, thank you so much. Just like we did yesterday, we just have to put you on hold just for a couple of seconds as we inform our DSTV viewers that once again, Asheyori is back. We know that Senator Jimoh Ibrahim is running to be the governor of Ondo State, so he's having interactions, with the people of Ondo State. Yesterday, he met with the youth. Now he's meeting with the women. There's a Asheyori Women Conference also going on in Akure now. So for our viewers on DSTV, we'll hook up to that. But for the rest of us, we'll continue with Business Incorporated. As we head to the market now with Cassandra. Cassandra, let's turn our attention to the market and see what investors are looking at today.
Well, speaking of the industrials, that sector lifted the Stock 600 index higher today following ABB's upbeat results. But Germany-listed Sartorius was on track for its biggest drop in 6 months after some bleak quarterly orders numbers. Another noteworthy mover was Nokia, who slipped 2.2% after the Finnish telecom gear maker's quarterly profit figures missed estimates. Elsewhere, Europe's main stock markets rose at the start of trading following gains in Asia and a sell-off on Wall Street. London's FTSE 100 gained a half point, the Paris CAC 40 gained 0.3, and the Frankfurt DAX saw a 0.2% increase.
So much, Cassandra, for that update. Now let's come to Nigeria and talk about cement. Well, I think it was last week I had that conversation on what's going on in the construction industry. And we know that cement has been receiving a whole lot of attention as one of the most important inputs in building. We've seen the struggle to balance it at 10,000 naira for 50 kg of cement. We'll have Victoria Momo now, analyst with Financial Derivatives Company, joining us to give us updates on the pricing and some of those drivers of that price. Hi, Victoria. Good afternoon. So could you bring us up to date? Do we now have cement at 10,000, which was the promised price?
Good afternoon. Thank you so much for having me, Ini. Like you rightly said, consumers are concerned about the recent trend in cement prices, right? And there have been a couple of movements, a couple of moves by the federal government, by the cement manufacturers to actually manipulate the prices in quote. So basically, we've seen a kind of consensus between the federal government and the cement manufacturers about the pricing of cement. And there is a particular range that is being given to cement manufacturers at which cement should be sold to the consumers in order to mitigate, the inflationary impact of cement prices. So basically, this range is between, 7,000 naira per 50 kg bag to 8,000 naira per 50 kg bag, although it's a significant decline from the peak of about 14,000 naira, right? But it's still high, right? But basically the increase for this cement prices, the reason why cement prices actually got to that high was because of a couple of factors which the cement manufacturers have let the federal government have an idea of. Right. So one of which is the cost of importation because of the exchange rate depreciation. This exchange rate depreciation actually led to the revision of the import duty, which actually caused the cost for importing spare parts which are used for the machineries in producing cement. And apart from that, we also saw issues like smuggling, because at some point when the exchange rate depreciated sharply, we saw that our goods were relatively cheaper compared to our counterparts, right? So most of these distributors actually exports the cement to countries outside Nigeria, and that puts pressure on the supply of cement domestically and also caused the prices to rise. But like I said earlier, there has been a consensus to put the price at a particular range in order to mitigate that impact on the consumers, and we expect that prices should remain relatively stable, because gas, which is a major input in producing cement, has actually recorded decline in prices both internationally and domestically. So we expect that would feed into the prices of cement domestically, as well as the exchange rate, which we've seen significant appreciation in the last 2 months. We expect that to filter into the prices of cement.
Yeah, but what about the fact that the current Minister of Works, Mr. David Umahi, has been positive to using cement for roads and other construction? That will mean more demand. What's that going to do to price, even though we see the gas and the other factors driving it down?
Okay, so basically it's a good move, considering the fact that cement roads as an alternative for asphalt or bitumen paved road is actually more durable, has low cost of maintenance, and is ideal for Nigeria's weather condition. And then again, the pressure on the naira would also reduce, because bitumen is being imported into the country, right, in order to make these roads, to construct these roads, basically. So concrete paved roads is actually a good alternative for bitumen paved road. And of course, one of the inputs that is being used for concrete paved road is actually cement, right? And that would actually lead to an increase in demand for cement, like you rightly said. And the supply and demand dynamics for cement implies that once there is a surge in demand for cement, the prices is expected to, rise in tandem, right? But that is, the medium to long-term outlook of cement prices. But consider the fact that, road construction, bridges, and the likes, they are quite, they take quite a long period of time to achieve. So in the short term, we expect that prices will remain relatively stable. And, the weather factor also has a role to play in that regard, because we're slowly approaching, the wet season, and it is expected that construction activities would decline, and that would weigh on the demand for cement and also the prices for cement. But once the prices increases, it's imposes additional burden on housing prospects and also the pricing of housing, and that could weigh on the real estate industry as well as the construction industry.
All right, Victoria, thank you so much for giving us that perspective. Victoria Momo is an analyst with Financial Derivatives Company.
Thank you for having me.
Right, to other stories now. The president of the Lagos Chamber of Commerce and Industry, Mr. Gabriel Dahosa, has commended the federal government on the recent inauguration of a national steering committee for the proposed national single window project, but notes that to fully explore the benefits of the single window platform, the government has to involve the users as the exporters and importers at both the planning and implementation stages for maximum impact. Mr. Dahosa is also advocating the adoption of best practices that have worked in some of other climes, such as automation technology driving implementation strategy. The Business Community Advocacy Voice, that's the LCCI, promises to engage relevant government agencies, the media, and other interest groups on actionable recommendations for growing of the nation's economy. To Zimbabwe now, where illegal money changers are back on the streets after a brief hiatus following the introduction of a new gold-backed currency. We call it the ZiG, Zimbabwe Gold. Although the currency is still only available electronically as the new notes and coins are still under production, the money changers are offering slightly higher rates than the official one, which was $1 to 13.3437 ZiG. On Wednesday. The black market is, however, offering about 15 ZiG, that's a buy rate, and around 20 for the sell rate to the US dollar. And there's been much skepticism in the market over the introduction of that country's sixth currency since its independence, with people suggesting that the move was a clever way for the authorities to remove some zeros from the inflation-battered old Zimbabwean dollar. The ZiG started trading on April the 8th at an exchange rate of 13.562 of the US dollar, as the Reserve Bank of Zimbabwe sought to deal with a high demand for foreign exchange of foreign currency, which is currently used as a store of value, and also to boost confidence on local currency. So I guess the dangers flow into the new Zimbabwean dollar, Zimbabwean gold, beg your pardon, used to be dollar, but now they call it ZiG, Zimbabwean gold. And they'll have to work a whole lot, to ensure that the troubles of the old currency doesn't find its way to the new one. But anyways, let's go to the cryptocurrency market and see a lot of things, I think. I just see some reports earlier today. I know Ladi has his fingers on all of them, but Ladi, I think Ladi's more interested in the halving. I can't wait for the halving to come and get another news.
Just 1 day and 15 hours, blocks until the halving, 241, 9.90 minutes approximate block time. So it's almost here.
So that means
really.
It falls on Saturday?
Yeah, that's
tomorrow is Friday, and then 15 hours.
15 hours.
You're talking about Saturday.
Then we have the halving, then who knows what happens to the market next.
Yeah, I think some people are saying now that the halving, post-halving might not be very good for Bitcoin or something.
Because you know how markets behave. When the news comes, you sell the news. And maybe, because who's going to be buying after the news? Except another news comes. But who knows? At this point. But that's how the market goes. Let's look at the top headlines this afternoon. See, JP Morgan, they've gone short on Bitcoin. According to reports, the open interest in Bitcoin futures suggests that the crypto market is still in overbought state. Either the Bitcoin might struggle to keep up after the halving, just like we just discussed right there. We see Grayscale Bitcoin holdings is down about 50%. That's news because the price that they bought before now definitely was one of the higher ranges we've seen so far with Bitcoin. Bitcoin's price after touching about 73,000. So the Grayscale Bitcoin holding, that's down. And now the question is, meme mania, is that over? At this time, we've seen all the meme coins, the frogs, the dogs, the cats, all of that minting gains in the market. But now there's a suggestion that the meme mania might actually be over, at this time. So who knows? Maybe the meme coins have gone to sleep right now with the downturn in the market. Let's bring in Olumide Adesina, our financial market analyst. Hello, Olumide. Hello, Lumide.
Yeah, Hello, Ladi. Good afternoon.
Yeah, good afternoon, Lumide. Great to have you. So I saw that headline earlier today saying that Binance have shifted $1 billion emergency fund. They've shifted all of that to the US this year. I think they call that fund the SAFU fund. It was supposed to be safe, but it turned out to be a typo. Turned out to be the new word. That's SAFU, saying that your money is safe, or SAFU. But talk to me about this switch now. Normally they had like Bitcoin and other cryptocurrencies, in this fund, but now they're shifting all of that into USDC. Any risk to that?
Ladi, USD is this even currency, and you understand the dynamics it plays in the market. I think this year's data has also retreated the fact that investors really depend more on other assets like gold and the US dollar rather than Bitcoin and other risky assets. Despite the fact that we've seen Bitcoin posting year-to-date gains of more than 60%, we've seen moderation considerably by heightened geopolitical tension and currency declines in places like South Korea and Japan. That has also put the US dollar index at a 5-month high, despite moderating since yesterday and today. But as we speak, appetite for Bitcoin has improved from its low of $59,400 to now trading at around $62,000. That really has kept the bulls ranging. But it seems JP Morgan's outlook on Bitcoin seems to be on spot despite halving, and that's because appetite for risk has watered down with heightened tensions in the Middle East.
Yeah, and talking about heightened tensions in the Middle East, over the weekend we see Bitcoin, that market was open, so it reacted. When we got that news that Iran attacked some parts of Israel there with those missiles. But looking at the move now, we've seen oil. Oil actually rose Friday. That was before that, but that has dropped, since then. So there's no risk premium for oil at this point. But why is Bitcoin still reacting negatively at this time?
Yeah, despite the fact that panic has receded, caution is still in play, and that's why you see the dollar index breaking over its 5-month high. At some point, it was around 106 index point before moderating back to 105. So it still tells you that the appetite for dollar is strong, and you could also see it in UX stocks, despite the fact that Goldman Sachs brought in decent earning results. So back to Bitcoin, this is an asset that trades 24/7 without sleeping. Record inflow from BlackRock spot ETFs has also moderated. We're not seeing those inflows we saw in the month of March, like what we are seeing in April. So that definitely has an impact on the liquidity space. But, the crypto market is still $2 trillion up. Bitcoin is still above the critical support, 60,000. So there's still a lot to play about. I think it's too early for us to really put that on the long-term view of Bitcoin.
Right. And looking at 2023, it was the beginning of 2023 with the headwinds we saw, macroeconomic headwinds. It was risk-off sentiment. That was what was being thrown about at that time. But we saw risk assets. They did well in 2023, like Bitcoin and the likes. But this is 2024. First quarter is over. Is it time to start shifting away from risk assets at this time, or could risk assets still do well in 2024?
I think what last year I taught a lot of people is that it's very difficult to bring in a spot-on analysis on this asset. I think looking at it this year, like I said earlier, Bitcoin has pretty much done better than most assets. It's up 60%, definitely has rewarded long-term investors. But I think with the tensions around different places in the world and also climate change, in Dubai, there's a big crypto event going on, but the flooding has really affected that. That might also have some negative impact because that's an opportunity for investors in that space to interact. But my outlook is caution. I still see Bitcoin still staying much stronger, if not holding most of its gains. But we can never tell if Israel hits back at Iran or something else happens. So I think caution is the key word here. Caution.
Caution, caution, caution. Thank you so much, Olumide Adesina, financial market analyst.
Thank you for having me.
Right, so Ini, there you have it. According to Olumide, it's caution, caution, caution at this point. Investors holding their breath at this point, trying to find out what Israel's next move is going to be. So I guess that's why we're seeing all that.
Let's send a flight to Prime Minister Netanyahu's room.
Right.
I think that will help us.
And investors can calm down.
Exactly. All right, Ladi, thank you so much. Well, that's it on the program. Thank you so much for being a part of it again. We have a final one tomorrow, and guess what? I'll see you at 10 a.m. on Business Morning. And so we'll have a lot of fun tomorrow, so you don't want to miss it. I'm Ini John McQuarrie. Enjoy the rest of your day.